Taking a look at our percentage of accounts receivable method. So the key difference here between this and the percentage of sales method is the percentage that we're going to be calculating is based on our accounts receivable at year end. But in addition to that, we are going to be calculating that amount as our ending balance. So we're going to need to work backwards in order to generally calculate our bad debt expense. So let's take a look at this question. Universal Inc. estimates uncollectible accounts based on estimated accounts receivable at year end. Universal Inc. estimates that it will have $150,000 of accounts receivable at year end and will not be able to collect 3% of that amount. So the company has a $1,500 beginning balance of allowance for uncollectible accounts. Calculate the bad debt expense for the current year. So this is a very common question when you see topics on percentage of accounts receivable method. So we need to first calculate our ending balance. So that is going to be based on the percentage of accounts receivable at year end. So we know our beginning balance is $1,500. And we're going to be calculating our bad debt expense, right? So in order to do that, we first have to determine our ending balance. We know this based on our percentage of accounts receivable. So we know that that is going to be 3% of 150,000, right? 3% of 150,000, and that is going to equal $4,500. So you might be tempted to go with answer A. However, that would be wrong, because in order to calculate the bad debt expense, we need to first determine our ending balance and then be able to work backwards into our bad debt expense. So this is the amount that would be recorded as our bad debt expense. This would be debited, right? And this would be 3,000. And we would credit our allowance. So the other 3K, and that would be our credit. So $3,000, therefore, is going to be our bad debt expense. Answer B is correct.